Hey, Andrew, welcome back to the office, man.
It's good to be back. Yeah, I arrived 2 days ago. Yesterday,
Yeah.
completely jet lagged and slept pretty much all day.
Yeah.
And today was a good trading day, and I'm just getting back into the routine of eating healthy, doing the workout, and it's good to be back in Vancouver.
Yeah, that's awesome, man. Yeah, we're definitely glad to have you. You bring that chaotic energy with yourself to the office, which we really appreciate.
Well, that's the job of a CEO, is to make everybody uncomfortable. So that's
Okay.
just that's what I do.
No, amazing. But all jokes aside, I got a couple of slides ready for your Everest, exhibition. Congratulations on that.
Thank
Huge
you.
achievement, genuinely. Tell us a little bit about Everest, what it was like, without giving too much away, because I know you're presenting in New York of mental resilience and trading.
Yeah, I mean, climbing Everest, I always knew, Adi, that it's a very, very mental endeavor, more than a physical. Like physically you can, but mentally it's very, very hard and challenging. And I actually didn't really understand that until I went through that. So that's why I want to have that presentation about what I learned about the mental resilience and pushing yourself when you think you cannot do that, and also Money Show, the conference, they actually invited me for September in Toronto. So we're gonna have actually that keynote speaking as well there.
Keynote speaker.
Yeah, they invited me as a keynote speaker, which is amazing.
Congratulations.
Thank you. Yeah, I'll have to go through the pictures and videos and some notes that I had and really recap all of the things that I did. But the most important thing was, Adi, when you climb Everest, you have to focus on the every step that is ahead of you. I mean, I have always a tendency of being in regretting the past or anxiety of the future, but in that moment when you're climbing, especially for the summit push the last day, it's just every step. Your mind cannot go somewhere else except just focus on every step that you're having. And one of the things that I want to actually take away from that experience is that live in the moment. That was the true definition of the living in the moment for almost 15 hours on the summit push from Camp 4. That don't think about anything else. Don't think about the mistakes that you did in the past or the dangers that is ahead of you. Just focus on that moment and step by step making it better.
Yeah. For sure. I mean, you talked about it in your newsletter. I think you wrote about how from Camp 4 to the summit, there is this area where you call it death zone as well, but there's this area where you talk about how you have to make peace with the fact that this might be it.
Yeah, 100%. So
like in terms of like death, I'm talking about.
When you start seeing the dead bodies, maybe you can show actually one of the pictures of the dead bodies. It's frowned upon to share that. I took a couple of pictures of them, but when you reach to 8,000, 600, so which would be around 26,000 feet. When you start reaching that point, it gets very, very challenging. Oxygen is very low and cold. And of course, you are at the most exhausted time. You start seeing dead bodies. And one of them was the recent one that actually 5 hours before me just passed away.
I saw those pictures.
So those pictures. I was so scared. The moment that I saw and I said, okay, I'm not ready to die for that mountain. It's just not worth it. The risk to reward wasn't there for me, and I wanted to go back. It was just like 10 minutes into the summit, and I asked my Sherpa, you have the mask, and you could say, you can't talk really in that environment. That I want to go back, and then my Sherpa looked at me, and so he saw the dead body and said, no, just push 10 minutes, and he pushed it. And that moment when he pushed me, that was the moment that I said, okay, it's okay. That was my journey. I mean, I'm gonna be there too. Let at least go up, because it's not only going up. You have to come back in that area as well, and add into that the cold and wind and lack of oxygen. But it was a very weird. It's a very, very weird feeling that when you accept that, okay, this is it, and let's go do the last 10, 15, 20 minutes of the path. Specifically, that I didn't know that how difficult it could be coming down. Because when you're going up through those very steep icy sections, you know that you have to come down, and that was a very, very.
Is it the same path coming down?
Yeah, it's the same path. Wow. Most of it, like 99% of it, same path. Sometimes there are two ropes that one of them for people coming up, one of them going down.
That's crazy. So which one do you think is more of a life-changing experience? The first time you did Burning Man or Everest?
I think they're different in nature. I think they are definitely different in nature. Like Burning Man, it was more like a lifestyle change.
Yeah.
Like I decided to, live differently.
Yeah.
Everest was more like a spiritual change and a spiritual impact on my myself, on my mind.
Oh, that's amazing.
Yeah.
Well, yeah, congratulations. Definitely a lot of people missed you. And so the story of, it's so interesting. So you did it on, I think it was May 19 where you submitted. And Peter knew. Peter was the first person who found out. Peter, for those of you who don't, is a moderator, with us. He's been with us for a while. He was the first person that found out, but nothing was really set in stone. I didn't know, and I started receiving messages from relatives and family members, and I'm like, oh God, don't tell me there's some bad news out there that you gotta go search. So I messaged your Sherpa, actually, and he was the one that actually gave me the thumbs up that no, you've submitted and you're on your way back and everything's good and safe. And that's when we announced it. So it was,
they had the radio communication, the Sherpas together.
Yeah.
The one that you messaged was the expedition leader. He wasn't actually the Sherpa that took me up there. But I know that they're trying to put some tower there so you can get actually access on the top. So people, you get into the messaging much easier, and even if there is an accident, they can message much faster. But I know one person from Starlink was there trying to actually make a call with Elon Musk up there. I don't think he made it because we didn't hear the news, but they told me that there is someone from Starlink that trying to go up on the summit and do a phone call with Elon Musk. Actually Starlink was working in that area. There are a couple of people there who had it, but it was supposed not to, it's not active in Nepal and India, Starlink, but because of this expedition that Elon Musk apparently was involved, they activated the ports there.
That's hilarious. That's a good marketing if it would have
worked. I don't think he made it though.
How was your effort reaching out to Elon Musk?
No response. No, unfortunately, no response. Probably we didn't do a proper channeling.
Yeah.
But regardless, I mean, it was not an environment that you can take in Starlink up there, and it was just way too cold. I was way too exhausted and lack of oxygen. Like, I couldn't really do it anyways.
Yeah. Well, congratulations. I know we're gonna talk a lot more about it in our New York. You're doing a presentation, a 45-minute presentation. So it's our live event. If you're considering coming, definitely check that out. Also, this is a new format we're trying. If you're enjoying this conversation, give us a thumbs up. Subscribe to our channel.
Ask questions. We'd love to have this get the questions from the comments, and so for the next session, maybe we can actually answer questions from the chat.
Oh yeah, absolutely. Especially about Everest as well, right?
Anything in general, any topic that we would like to discuss.
Yeah. So let's switch back to markets. What do you think?
I mean, I was away from the market. It seems that the market has been choppy. I know that we are in the AI mania, like NVIDIA and AI, and any company that has the AI or mentions the AI in their earnings is just running up. We've seen that, Ardi, this kind of manias before. So I don't think it's going to last, but until it lasts, I think it's got a lot of good trading opportunities.
Exactly. The good thing about manias is, like, if you know how to trade them, these are the times you get rich, right?
It's amazing, and you can also get poor as well. But so far, like NVIDIA has been on our radar for almost a year now. We've been trading it very actively. You remember the SOXL puts that we sold?
SOXL puts that we sold. I wrote an article about it in Trading Terminal in, I think it was maybe November or October, how SOXL is going to be the trade of the century.
And we didn't take it. I mean, we
did take it,
but we could have done way well.
We made 6 figures on that trade.
Yeah, we did.
It's you can't be greedy, right? You gotta.
Yeah, I mean, I guess hindsight is always 2020.
Yeah, exactly. So SPY, low of March 380, came and then has been rallying ever since. Today was another strong day on pretty much no news, and it seems like we're about to do a breakout. So this 380 420 have been area of resistance. Is tomorrow's job number what we need for this breakout? Who knows? Some people are skeptical. They're talking about a really bad breadth of the market. So let me actually go to our main page in Trading Terminal. You can kind of see that there's still 60% of stocks that are below their 50 moving average. There's still 60% of stocks, 62% that are below their 200 moving average. And even today that indices were up 1%, it was a 50-50 day in terms of new high and new low. So not a very strong market. What do you think? What's kind of your take on where this market is going?
there are two arguments that you mentioned that there are leaders that are leading the market. Like now, these are some of the tech companies, and Apple are near all-time high, and the rest of the market follows as after they reach to a point that they don't make any sense. The market starts buying small caps and mid caps. And another argument is that this is just a short term rally, and still we have no reason for the market to rally. To be honest with you,
what do you think?
I mean, I think we might be in a range bound market. Like we tested back in February, SPY in around this 420, 415.
Yeah.
So we might have a pullback and trade it range bound and see what's going to happen. But to be honest with you, Ardi, I don't know. Like I am in a very conservative position. As you know, I'm in JP, and JP is really good in a bear market, but it's underperforming the bull market.
Yeah. It's definitely interesting. I mean, speaking of, I have some really interesting facts that I wanted to share with you and the audience. And this is the interesting part. This is the discrepancies between S&P 500 information technology sector minus their total return, S&P 500 total return, so the spread. And you can kind of see it's usually around 0 to 2%, but this is the highest it's ever been of tech outperforming the rest of the market. This is the highest it's been. When was the last time it was this high?
In .com
2002
bubble,
in .com bubble. So I mean, is this another .com bubble?
So those lines are phenomenons that happen, like ChatGPT, and then iPhone was introduced around 2008, and then the BlackBerry. So those lines are the phenomenons,
right? So how manias get started? So iPhone, of course, it was another tech mania. BlackBerry. I mean, for those who are old enough, they know BlackBerry was really revolutionary with the keyboard. So really mania style. And now with ChatGPT and AI, you have 10% of outperformance of technology versus the rest of the index.
Definitely doesn't last though. I mean, I was in Dubai and had a conversation with one of our traders and investors, and he actually made a crazy return so far on this sector. And my advice to him was to take some profits. Like we've seen these manias before. Like we've seen the mania of marijuana, psychedelics, travel sector, work from home, Zoom, Platon, vaccines, and they're all, personal protections like gloves and stuff, during the COVID, but they're not gonna last. So if you are in there, you got lucky. I wasn't. Take half the position off, or 70% off, and let some of it run. But I'm 100% sure that this is not gonna last.
Yeah, for sure. I mean, especially with tech. So again, I got another chart up that this clearly shows the similarity. This is again information technology minus excluding the tech monthly return. So if you take out the tech, how the spread's gonna look. It's very similar to what happened in 2002. And by the way, that was not the market bottom. So be mindful, but for all that matters. But you're absolutely right. Even with AI, and we've used ChatGPT and that stuff, like the technology is still very early. It feels early. It feels like the early days of internet, right? You didn't know what it's gonna be. So is this form of AI the AI we're gonna use 10 years from now? I don't know. I don't think so.
Crypto as well. Do you remember that NFT was really active in 2021, and they said this is it all? We had some people that they said they want to buy metaverse properties instead of real properties. And it was a concept that it was very interesting, but it's far from utilization and actually implementation. I personally have a little bit of a FOMO that I'm not into this sector, but I know that it's not going to last like that, and either they come down or everything else is catching up with this valuation.
Yeah, definitely, 1000%. Shall we talk about small caps a little?
Oh yes, my favorite sector is small caps. IWM, essentially the index that tracks them.
So this is an interesting chart that I see. So usually in the long run, the kind of a finance theory tells you that the small caps should outperform the larger caps because it's riskier, and the basic of finance says the more risk you take, the more you should be rewarded. And you can kind of see this chart as well is comparing Russell top 50 versus Russell 2000, which is these are smaller caps and these are larger caps. And you can kind of see that Russell 2000, at least in the past almost 30 years, has outperformed Russell top 50. But there is this divergence now in the past 2 years happening. So Russell 2000 is not doing anything, is coming down, but Russell top 50 is going up. So can this divergence last? Is a small cap dead, or are small cap going to come back? I personally think we're not at the end of this cycle yet, and I think small caps still have a lot of room to go, but we just have to bottom in this cycle.
Yeah, I think these are the first to dump and the last to buy. Like imagine if you're a fund, and I remember that exactly in the early 2020, late 2021, when everybody was expecting the high inflation and the higher interest rate. The first index that got collapsed was IWM. Started dumping, and I had a position on that. That I had a loss on that. And then after that, obviously, everyone wants to buy. They go with the big names, big names, and then they at the bottom they start buying them. But here's a problem with this chart, Adi, that I have is most of the traders and most of the investors. They're not staying in the market for 30 years. So this chart is 30 years almost. And it says, if you wait 30 years, yes. But most of the people, the span of their investment is like 10, 15 years. And after that, they retire and they need the money. So it's very, very tricky to look at the charts that, say, if you wait 30 years, nobody
That's why
waits.
diversification is so important,
exactly,
right? And that's why you can't really look at these charts are meaningless. Like folks that are dumping money in QQQ right now and saying, because it has outperformed. Just because it has outperformed in the past 20 years doesn't mean it will.
Doesn't mean that. And then if you get a really big pullback and you have to, like S&P 500 after dot-com bubble took, or even 2000 financial crisis 2008, how many years it took to come back to the?
I think almost 2012. So it took about 3 years.
No, more than that. Or maybe from dot-com bubble to.
Dot-com bubble. So it peaked in 2002. And then 2007, it recovered all those losses, so 5 years.
5 years.
Then financial crisis happened, and
then another one.
2012, we recovered all those losses.
So almost 10 years took that.
Almost 10 years. If you would have, imagine if you were only focused on U.S. equities, no diversification, no global, no bond, from 2000, and you were retiring at 2007, you needed the money then, you were screwed, right?
So it's very, very, so that's the downside of the financial markets.
It is really important. Another thing I wanted to say, I know you're talking about JEPI, and I see a lot of dangerous talks on JEPI, and people saying, my lifestyle only needs $60,000, so I have $600,000, I'll put everything in JEPI and I get a 10% yield. I want to make sure our audience understand that's the wrong way of thinking about it. You're gonna run out of money, because
can you run off the map? Like if I have $1 million and I get $100,000 a year out of it, and I use all of it, how can I run out of the money?
Because you don't know the sequence of return. It's not 10% guaranteed, right? It's at that moment it's 10%, but remember, if JEPI goes down by 20%, now it's 10% of that 20% down. So you're no longer getting that 100,000. Now you're only getting 80,000. And because of the sequencing of the return and how it works, if you're taking 10% every year, you can run Monte Carlo simulation, their website that does it for you. I think 70% of the time you run out of money. So you don't want to do that.
So you should definitely have, what's the good use of that? What's the rule of thumb? If I get a 10% return, how much of that I should take and spend, and how much it has to reinvest into the fund?
4% is the rule of thumb. So
to go back to the fund?
4% takeout.
4% takeout.
4% takeout. Damn. So that with 4%, there's 99% chance you'll never run out of money. I mean, of course, there's always that 1% chance of fund collapsing.
Fund collapses,
But the 4% rule is basically the retirement rule. So if you have a $300,000 lifestyle, you gotta have a $7 million portfolio that you can don't even think about it. Every year take out 300,000, which is 4% of 7 million. You'll never run out of money.
Wow.
But some people want to run out of money. They don't want to pass it on to their next generation.
Yeah, but the problem is that the life expectancy has gone up significantly, and as the issue, people start retiring at 60, 65, and then they need to live until 85. and it's just not considering passing on anything to their next generations.
Yeah.
And this is an issue that I think it's very, very important
Yeah.
to understand. That I didn't know about the 4%.
Yeah. No, you want to be careful, because I see a lot of misinformation on Twitter, and it's usually from the accounts like dividend investing or dividend hack. But these folks don't understand the math, and they're giving this bad advice to people. And they're like, oh, by 35 I'll retire. Yeah, but by 55 you probably have to go back to work.
Yeah, that's what I was exactly thinking.
Yeah.
I was thinking, if I have $4 million in JP and JP is giving me 10%, that's $400,000, which is my lifestyle. But according to you, I have to double that money.
Oh yeah, you will run out of money in 70% of the cases. If that's I mean, you would never run out of money, right? Because you have a skill set that will make.
Yeah, I mean, just generally
speaking, if you were just counting on that.
For those of you who don't know what JP is a fund that ETF that established by JP Morgan.
Yeah.
I think in 2020 or 2021.
I think 2019 actually.
2019.
Yeah.
So what they do is for JP, they have different one. JP is I think about 150 companies. I think they have it in trading terminal. That they buy the position and then they write covered calls on it. They generate income and then they pass on that income to the investors. I think historically was a 10-12% before 10 to 12% return that they had.
Yeah, so the 3-year return right now is the CAGR, so compounded annual growth rate. So on a 3-year basis, which is how long the bond the ETF has been around, has given you 11% annually, 11.5%
in the last 3 years.
Last 3 years. So 1 year 11%, 1 year 11%. So basically every 7 years, this fund is doubling. Which is pretty good.
Which is nice if you can get that. I know in 2022 when the S&P 500 was minus 20%, JP was pretty much flat or minus 1%.
Yeah.
So that's good. You get the protection.
Yeah.
But the downside is if you get into the bull market, you underperform.
Yeah, it's a covered call ETF, right? And it's the same thing with covered call selling. The downside is you miss out on these massive rallies for a little bit of premium, and you get hit the tax bill. It's not a very tax efficient ETF either.
Yeah, so that's a good point.
Yeah, you want to be careful with those. But definitely a lot of stuff to talk about. Anything you're looking forward to this week?
I think Lulu had the earning, and I'm looking into that. I think we're not officially in the earnings season, are we?
No, actually earnings season, if anything, is done. So, by the way, you can check out our real-time simulator and actually take a look at, let me go to 1 minute chart, and you can actually see how the stock did after hours, which is, you can see, rallied from 330 all the way to 372, 12% up. Another stock that I actually had a straddle on was MongoDB.
I did that one.
That one did great as well. I kind of knew they're gonna
21%. Yeah.
The expected move was only like 12%. So tomorrow, if job market is not crazy, I'm gonna probably double my money on that, which is great. I kind of knew they're gonna beat their earning because we use them for trading terminal. And they're charging us a lot of money.
So that's another thing that
I had an insight.
I mean, Lulu was amazing because 24% increase in their sales. That's a lot, 24%.
Yeah.
And their guidance was really high, so it means that at least that retailer is doing really well. But I know overall the retailers are doing really, really bad. There was an ETF that has all the retailers in there. I don't remember the ticker.
Is it XRE?
I think it was XRE, yeah.
Or RXE or something like that. I don't know. Let me just retail.
XRT, yeah.
XRT?
Yeah.
Yeah. Well, let's go to daily and see how it's doing. Let's go to 1 day.
So it's not doing well at all. It's like a 52-week low. It means that all the retailers are under pressure.
I think I read a stat that Target was down 9 days in a row, which was like the longest streak of down days.
Target also had an issue because of in the US.
What issue?
Oh, you don't know that what the Target is? So Target apparently had it's a little bit of a controversial thing, but had a children's section for LGBT community.
Oh, I see.
And it was, it just kind of backfired to them, at least for half of the United States. People say, what is that? I mean, it's too early to have this, rainbow section for children and
Yeah.
stuff. So they started saying, a campaign of boycotting Target. So it's a little bit of that as
That's
well.
interesting. I'm usually skeptical of those. Like Budweiser had one as well. And
That
people
got hit as well. North Face also
Yeah.
did one as
I
well.
don't know how much it impacts the stock. I mean, it's so clear from this chart that you mentioned. It's so clear. It has nothing. Like the retail is getting wrecked, right? Like,
But possibly
Yeah.
it could be just a coincidence, but this was something that at least the ones that boycott Target, they're pretty happy. They think that they are hitting it,
yeah.
but
That's
probably
true.
not. Yeah. But generally, it's interesting because they said that when inflation is high, the prices are going to go up. The retailers should make more money, but in reality, their margin is getting a squeeze. Their
Yeah.
cost is going higher,
Yeah.
and
Inflation is a double-edged sword because inflation was going up and they were banking a lot of money last year, but now inflation is going down, right? So that's another thing, and they still have that operational leverage.
The
They still got to
operational-
pay folks. They still got land. They still got leases that they got to take care of.
yeah,
So
exactly, yeah.
yeah,
So
they're
it's
getting
about
wrecked.
so nobody is actually really winning in an inflation environment.
Yeah. Yeah, no. But yeah, that's.
So what do you think about the interest rate? Do you think the Feds are in June meeting are going to increase or they pause?
It seems like the right now it all depends on tomorrow's number on jobs data. For whatever reason, Fed really cares about what's happening with employment. But last time I checked, it was 75% pause. Also, Powell in his press conference last time around talked about how they took out the line out of the statement, which was saying possible firming might be needed. They took that line out. And he said in the press conference, he said that was an important line, and I want the market to pay attention that we took that out, kind of signaling that, hey, we're pausing here at 5.25, we're pausing. But inflation hasn't been really slowing down.
Has or has not
it
been?
has not been. It's been at that 3.5-4% annualized. It's not coming down, and part of it is there's not much you could do when on a fiscal side you have no student debt payment. You're still getting extra bonuses for unemployment benefits, so people have their jobs, and they don't have to pay $1,000 a month for a student debt payment because that has been paused for like 3 years now. I mean, COVID was so long ago. Like, there's no crisis. We have to start. There's no burden on the consumer. Consumer is good. So
yeah. And what about the budget? The previous year budget was
the debt ceiling was
inflation.
raised. Yeah, the debt ceiling was raised. So I mean that's good. I guess the U.S. is not gonna get downgraded their debt. But
So now the question is, the Fed, when do they want the 2%? Do they want it right away? I mean, they're really, they want to keep going up to bring it down, or if they wait until 2-3 years, maybe the inflation comes down
no,
to
they
2%.
say that when they want it because they give their predictions, right? They give the Fed dots plot and all their forecasting.
When is it?
and
What's
stuff,
their
2025?
So in 2 years.
In 2 years.
So
that's
if
their
it's
goal.
it's cool. So in
Yeah.
4%, it's slowly coming down
Yeah,
to 2%. So
yeah.
at least it's not at 10%. That's the crazy number.
Yeah. But I mean, Canada's economy grew as well. Did you see that?
Yeah, I mean the soft landing, huh?
Yeah,
Soft landing
it grew
apparently.
at 2.5%, and the Canada's equity sold off really heavily yesterday.
Because they think they're going to be more hawkish, yeah.
Because they're going to be more hawkish. Inflation is stronger, economy is growing, so there's no reason for Bank of Canada to bring down the rates.
Well, in Canada, we are in Vancouver. The real estate market again picked up really bad, and very multiple offer. The prices are going to go up. I don't know. I mean, the mortgages are at 6-7% right now. Still, they're pushing it, and definitely they need a little bit of a more aggressiveness.
Yeah, I think it's a lot of speculation. A lot of the investors are speculating, and people think rates are going to go back to, zero. But
That's not going to happen. That's for sure. Yeah.
At least that's what they're saying.
Yeah. All right.
Yeah. All right.
That's awesome. That was a great discussion, and
Yeah.
we're gonna have this format, continue this format, guys, twice a week. That's what we're targeting.
Yeah,
We're bringing guests and better material. Trying to come up with the wrap up. Well, if you like this, we appreciate a like or subscribe to our channel. Definitely, if you have any question or comment or feedback, just give it us. And if you want any style in this podcast, let us know in the comments, and we would love to get this one going. I'm very excited for that.
Yeah, likewise. Yeah. Thanks,
Thank
everyone.
you. Bye.